Bitcoin bounces, but is this just a fake out? In this video, we're going to be taking a look at Bitcoin in a little bit more detail, starting off with the bigger macro picture, going down into the hourly chart. Just take a look at what's going on now. As I get into this video, if you find it useful and informative, hit the like button. I really do appreciate that. If you happen to be new to the channel, then why not go ahead and subscribe, tap the bell, select all notifications, and in doing so, you will be kept up to date with everything that we do here at 𝗕𝗘𝗪𝗀. If you have not yet joined us in Discord, links in the description down below. It's a fantastic community talking crypto 24/7. It's completely free, and I don't think you'll be disappointed by what you find down there, so why not go ahead and check it out today. And if you're looking for a little bit more from the crypto space, everything from bear market strategies, project reviews and trading, why not check out the Patreon services as well in the description below. Okay guys, let's get into this. Now I'm not going to go into the huge amounts of details on this. I've spoken about this a dozen times already over the course of the last few months. So do check out the more Bitcoin videos on the channel if this is the kind of thing that you're looking for. But essentially, I'm going to quite quickly run through a couple of things because I've seen quite a few different kind of comments here, there, and everywhere on the Twitter and YouTube and whatnot. People who are leaving the space for like several years. I wanted to kind of really articulate why that's a really bad idea. Okay, and I drew this up a while back, and I actually just kind of added a couple of things just so people can be crystal clear over where we are right now and where we are likely to be in the next couple of months or so, and then what happens after that. Okay, these are very important things that I don't think a lot of people are articulating very well. So what we've got, let me grab my pencil here, right? So in 2013, we can see that we had the double peak, right? Peak 1 and peak 2. I'm not really going to talk about that, but essentially you saw crash number 1, which was an 82%. And you can argue that that was a bear market, right? 82% crash. You could argue that is a bear market, considering bear markets were 86 and 84% retrospectively, and 82% fits right into the narrative of a bear market, right? Except this bear market only lasted 1 week, right? Maybe it lasted maybe a couple of months maximum right there, right? Straight down, straight back up again, and you got this double peak. We should also be thinking that this isn't natural in the way that it is happening right now. We haven't pulled back down to these levels of retracement, okay? And to think of this as a prolonged bear market like we had seen previously, I think is a little bit foolish. This is something different. It is definitely different. It's got different variables, okay? You cannot use the history with different variables that are associated with it. So understand that it's not going to be exactly the same. Now, the main thing I want to talk about really is the distance that it takes, or the time that it takes going from peak to bear market low. Okay, so when you go and take a look at 2013, the peak of 2013 here, this was, if I actually pull this up onto the daily, I think I had this down in November. Let me just shoot on back over here. Yeah, so we're talking about like November 2013, okay, and we come down and we bottom this out right down at the bottom here on the 14th of January 2015, right? So that's quite a significant period of time. You might be thinking that's quite a long time, but actually it isn't really in the grand scheme of things. It's about 1.1 years, 413 days, okay? So it's an interesting kind of thing to just remember, right? The bear market was 86% pullback, and it only took it 413 days to get there. Okay, so that was 2013. Now, what we also want to talk about is, well, how long did it take to go from this low point, right, this bear market low, to the previous all-time high? Well, that was 777 days. Okay, so if you are, let's just say, one of those kind of people who is like, that's it, we're in a bear market, I'll see you in a couple of years kind of thing, then you're going to miss the lows. Instead, you're going to come back when it's actually already at the previous all-time high, meaning that you would have missed out on all those gains. Now, if we just did the same, if we just assumed that this is what you did back in 2015 after this low, you would have missed out on 647% in gains. Okay, so really, if we were to be brutally honest about it, what we actually want to do essentially is buy this dip, then disappear for a couple of days, right? A couple of years, right? Because once you've pulled that, the hodler doesn't care. The hodler can just buy this dip that happens, 413 days after the peak, and then they can disappear for a couple of years. But to disappear for a couple of years and then come back and not buying this dip is an absolutely foolish statement. So I've seen a couple of I guess comments on Twitter and YouTube and stuff of people saying, that's it, we're in a bear market, I'll see you in a few years or whatever. It doesn't make sense. It's illogical. But that's just 2013 bull run, 2015 bear market. What about the 2017 high? Well, we can see up here that we had peaked this up in December of 2017. The bear market low came down here 364 days later in December of 2018. Okay, so basically we are 1 year. It's a short bear market, right? It's a little bit shorter than what was over here, but not as short as what bear market happened back in 2013. So, okay, so cool. So basically, if I am, you know, about here, right, and I said we're in a bear market, I'll see you in a few years, then you're going to be buying all the way over here, rather than buying all the way over here, which doesn't make sense either, right? So again, we've got two scenarios now where we have consistency. But how long does it take to go from the bear market low to the previous all-time high? Well, 728 days. So we can argue that as on average, there's about 750 days between bear market lows and previous all-time highs, which is a significant period of time. So if you're going to disappear anywhere, you have to disappear from the crypto space once you've actually bought the bottom in, right? Once your low has come in. I mean, even then, though, to be fair, you can see significant gains, and you could trade this quite nicely and make pretty significant amounts of cash just by trading it. So pretty interesting stuff. Okay, so what about now? Where are we? Well, right now, we've seen obviously the 56% crash. That was from the $65,000 high down to the $28,000 low. We then pushed up to the high points up here at $69,000. Okay, and then we pull back down. Okay, so let's actually zoom in on this then. Let me just bring this up here. Okay, so from the all-time high to our current place, let me just grab that, there we go. From the current all-time high to where we are today, it's been 182 days. Okay, now if the bear market bottoms out in approximately 360 days, it might even be less than that, because there is a scenario here where we could argue the data is suggesting that we are shrinking the bear markets, they're getting shorter, not longer. Then in which case, you know, we are potentially, you know, over halfway through, and we're going to reach this bottom relatively soon, but everything bounces, nothing moves in straight lines. So we could be talking about an autumn finishing this kind of bear market strategy in just a few months, finding the bottom and accumulating at the bottom. Then, of course, if we wanted to, we could disappear. Now, obviously, I wouldn't do that because there's a lot of money to be made in actively moving the money around, right? Trading, in essence, if that's how you want to look at it. But so for me, that doesn't make a lot of sense. Disappearing for a few years doesn't make a lot of sense. Now is the time you want to engage in crypto. Now is the time where you want to stick around, because this is where the money is made. The money is not made on the way up. The money is made on the way down once you reach these low bottoms, right? These are the areas where maximum amount of potential is going to be achieved. So now is not the time to disappear for a few years. Now is the time to really engage, do research on fundamentals of projects that you think are going to survive, you know, multiple years in the future. And basically finding the bottom and basically dollar cost averaging fantastic positions into them years ahead of when they're actually going to go up into those new all-time highs, right? So just understand that actually from a strategic point of view, that's really what you want to be doing as a hodler and as a retail investor. What you don't want to do is just disappear, disengage, and you know, come back when you're already at the previous all-time high. That doesn't make sense. It's illogical, and that is not what you'd want to do from an investment perspective. Instead, what you want to do is you want to find things that are undervalued. You want to find them when they're undervalued. You want to invest in them when they're undervalued, and obviously in doing so, you have to make sure that you have fundamental research that backs up your claims to say that this is an undervalued altcoin or an undervalued project that you're going to be investing in. And there's a lot of opportunities to even get in on private sales and things like that as there are new projects looking to launch. So essentially now is not the time to be fearful. Now is not the time to be worried. Now is the time to take advantage of the situation and to use it to your advantage for your future self to thank you. Okay, so I wanted to start off with video with that. I've rambled on for about 9 minutes now, so I'm going to jump on down into some of the smaller stuff because they have had a bounce today. Everything is in the green, but guys, it's not going to last all too long. So let's take a look, right? So here we can see that we're in this third wave down. There's 5 waves inside this. Okay, we're bouncing up here. This 4th wave has actually come on to where I was kind of thinking it was going to, right up here. So this is a bounce, right? We can see this as an A, B and C, just like so. We can probably push it ever so slightly more, but I'm not expecting much, and I'll go through why in a moment. Here we can just see if I move that over there, we're coming up to just short of the 1-to-1 ratio. That should actually be up there at 31,400. I think we've gone as high as 31,083. So you know, you're not too far off the expectations there. Right now, if we take a look at the stochastic RSI, you can already see that it's up there in the overbought. It's actually kind of pulling back down a little bit, so it might come up. We might just get that push up a little bit higher there. It'll be interesting to see how that plays out. On the 4-hourly though, we're almost up in the overbought area. The 8-hourly almost overbought. So these things are saying there's a little bit more to be given here, but not terribly too much more. The daily is actually okay. The weekly's pulled down nicely. So on this next pullback for Bitcoin, I would imagine all of that should bottom out. And of course, the monthly is where the monthly is. So why do I think this is going to be the top? Well, first of all, this is a fourth wave correction. Now, the fourth wave can be complex, and it probably will be. Based on how simple wave 2 was. So we might find that this might be a zigzag or a double 3 or something like that to that effect. So we're going to just keep an eye out on that. So it might pull back and then push back up again before coming down lower. Okay, this is just a corrective phase that is phase 4. And once we figure out how high this thing goes, we'll be able to truly indicate how low we are expecting that fifth wave to go. Okay, so we've obviously got our expectations set down here at about 22,967. That is where I'm expecting it to go. Now, the reason for that, if I come up to the daily, just bring this back down, is a big ABC on this daily chart, taking us down to 22,967. What I was personally hoping for was there would be a running flat correction here within this fourth wave, which again, as I just said, is complex correction. Okay, and there still is, of course, the bullish structure for a fifth wave after. I was expecting this to be a running flat. We're actually parked halfway at about 32, then pumped to 48k, sorry. But essentially now this is an expanding flat, more in line with the bearish scenarios that everyone keeps talking about. But again, this is all a corrective phase. Afterwards, I would expect an impulsive structure to come up, take Bitcoin up to 78,000 or maybe a little bit higher. And as low as this goes, the higher our fifth wave has to go. And if we are to think that this entire fifth wave is a new bull run, then in which case that might be an overextended fifth wave, and that might even go higher than my expectations at the moment. So you're going to keep these things kind of open-minded at the moment, and essentially, you know, it might even be the same measurement as a wave 1 just up here as well. So I'm going to keep that kind of open-ended at the moment. However, I would be interested to kind of see how this kind of plays out and what your thoughts and opinions are down in the comments below. But essentially, I think this pump that we're having right now is a complex fourth wave. I would expect a pull back. I would expect another surge up, and then I would expect a complete collapse down in 5-wave fashion towards 22,900. It can slightly overextend, and I would not expect it to drop down any lower than $20,000. Obviously, you can see that this is the area that lots of people have been calling out for quite some time. I think personally we're going to avoid it, and I think if we were to really reflect on everything that was going on here, I would not be too surprised if it actually lands just above this on this 382 area at 21,900, just short or just overextending my 22,900 range, but not going into that low box area. That little gap I think will be avoided, and I think that it's going to do that just because everyone is expecting it to go there. And I think it will reverse before anyone gets the opportunity to buy 20,000 Bitcoin, in my opinion. But, you know, we'll see how it all plays out. For now, this is kind of what we're looking at. We're looking for these lows. Once they come in, I would be expecting an impulsive structure, something to this effect, taking us up to these new all-time highs. And then this will be where the bear market will start. And that will basically wipe out all of 2023, in my opinion. And we go into 2024 and we have the Bitcoin halving event, and from there we can have another bull run. So it's going to be interesting to see how this plays out. I'm not aligning to the history now. I think the history for Bitcoin has dynamically changed, and I don't think we can really truly utilize the history to our advantage anymore. But you know, we'll see how that plays out. We'll see how this all finishes. We'll see and add this history into the mix and how that might affect things going further forward as we talk about 2024 and 2025. But guys, I'm going to leave the video there. If you have found this useful and informative, hit the like button. I really do appreciate that. If you happen to be new to the channel, then why not go ahead and subscribe, tap the bell, select all notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. With all that said, done and out of the way, I hope everyone has a fantastic day, and I'll catch you all in the next one.